Hello, fellow traders. 'Tis I, TheRumpledOne. It is Tuesday, July the 28th. The year's 2020. Let's talk trading. Secrets of Scalping 4. I've been getting some more questions, and it seems like some people still don't understand some of the ideas and suggestions that I've put out there, so I'm going to go over a few things for you. But just remember, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And remember, every trade, risk management in place. Don't lose more than you're willing to lose on any one particular trade. Brain management. Don't let fear and regret get in the way of you making money. Finally, when you have the opportunity to take money off of the table, take some money off of the table because the market will take it back. So it's top of the hour, and we've already seen that all gaps have filled. So let's just go right to the chart here. Now, somebody just asked, when you see a three ball, do you wait for the next candle to close? No, usually you wait for this candle to close. Okay, and it's right here, top of the hour. And on my charts, this starts a brand new H4 candle, 4-hour candle. Now, Walmart, he's already 2 hours into his 4-hour candle. That's one of the reasons you have to trade what you see. Okay. Now, the three ball was just here. You see it got pushed down. This candle dropped. So right here from daily all the way through the minute, we've got red. But on this particular chart, I use black and white candles, just because with the red lines here and blue lines here, sometimes you can't see the lines very well. So I hope that this three ball here, once again, we got to wait for the end of this candle. Now, you have a three ball. Do we break this high? If we do, then price at that particular time is going up. But you'd be trading against the H1 candle color, which is something that is a rule of thumb. Sometimes you break it because you're seeing a reversal, and sometimes you don't. So right here, that price would have triggered you in, because this is the ask. If you wait for the bid to get there, then price has to get this far. So as you can see, it just took out two highs. It cleared the top, or it cleared the high of the previous candle. That was our trigger, and right now we're up about a pip or so. So now it's all money management from here. Remember, we're scalping. So if we give back a pip, we should be out. Okay, you should be out. Now, price could reverse and continue up, but we don't know that. We can only trade what we see, not what we think, and not really what we anticipate, in the sense that we don't know what the market's going to do. That's why the market exists, because if somebody knew exactly what it was going to do, it would be game over. So one of the things I don't have on this chart, well, let me see. I don't remember. Hold on a second. I thought something looked funny. I didn't have the mid dots on this chart. So as you can see here, price opened above the mid dot. That was one of the hints to take that long trade. And you see here, price came down, touched the mid dot, but closed above it, opened below. That would have been the idea, or the trigger, or the hint to get out of the trade and take money off the table. But since we were scalping, as I mentioned before, if it gives back a pip, then, and you're up 2 pips, then it's time to get out if you didn't already take the 2 pips. Because once again, we're scalping. And you can see here H1 is still red, so we're still below the hourly open. And if I remember correctly, I think this was the open. I don't have the price meter on here. It looks like this candle was the open candle right here. So you can see price just made a higher low. So it's getting ready to clear this candle. Once again, this is if you want to trade long, but you have to, price has to clear the H1 open. Now we just put in an inside bar. If price breaks the inside bar, right there, you would be triggering long if that line gets taken out. So you don't want to rush the trade. You see it stopped right there. You need it to go at least 1 point by it so it clears that line. Oh, and what indicator puts these lines up? Can you guess? It's TROHL5. That's the free indicator. Just remember, only show not crisscross true. I got 60 bars of data for the last 60 minutes, and my shift is 1 because I don't want it on the current bar. So you can see here price failed to, actually price barely broke that high and then reversed. So if you stick to trading with the H1 candle color, you wouldn't be in any drawdown. So that's one of the things you have to figure out. Do you want to take that risk? So if we shift over here, let's see, this is the wick zone chart. You can see prices leaving the wick zone. Now somebody had asked, you know, what all, basically their question was, what all do you look at? Do you look at this? Do you look at that? And the answer is sometimes yes, sometimes no. It's better to be aware of certain levels, such as the daily wick zone. So you can see here price, it opened, this hour opened inside the wick zone, but it came out. And they also said, well, they were asking about the rat zone, and you can see here price opened in the rat zone and it came out. So trading long there, that first trade that triggered off of the 3 ball, yeah, you can take it, but remember, what does that 3 ball represent? And this is what most people get wrong about this indicator. See, 3 ball was here, now it just moved here. This 3 ball represents price is breaking out. So it doesn't mean that price is reversing. It means that it is breaking out. So when you see price get near that 3 ball or put in a 3 ball, that's when you're thinking, hey, even if it retraces, you can consider that a pullback. You see it came here and busted out again. So one of the things you can do is you can say, well, hey, if price is here, if the 3 ball is here and price gets back down, maybe I'll take that breakout trade. Or as you can see here, there was an inside bar. Because it barely broke it, you know, one point to the north or to the long side, then it broke it to the south side and gave you an opportunity to pick up a couple of more pips on that breakout. So that's why you have to be careful on these reversals, especially if you're going against the H1 candle color. Because you can see here, we did have a 1 ball here. So taking that price break at the line, see it's saying short bias. So right here, there was another reason to go short this hour. 80. And right now you could be up 3 pips. I think you had a potential 5. And for some people, 5 pips, that's all they want for the day. They might be trading $100 a pip or more, or 100 pounds a pip, or 100 euros a pip. And if they get 5 pips, they're done for the day. I mean, 500 times 5, that's 2,500 a week. That's 10,000 a month. It's 120,000 a year that you might be able to make in one trade in less than an hour. Not not bad for a day. And then you can spend life doing other things. You don't have to try and drive a Ferrari, but because you trade Forex. But you can, make pretty nice living if you have your parameters set. And those parameters are in trading is size and risk. Because in fact, I was talking to one friend of mine, and I won't say who it is, don't want to embarrass anybody, but he was telling me his trading plan. I said, do you realize you're going to have to win something like 18 or 19 trades in a row to get what you want? And then, because he didn't really realize it. He set these goals and he said, well, this is how I'm going to get there. But he didn't do the further analysis, just asking a very simple question. How many times in a row do I have to win to achieve my goal? So if you reduce it down to one win and you have something that's pretty accurate statistically, then you can make money. But a lot of traders out there are action junkies. They want to do 10, 20, 30, 50 trades a day. You're going to get cut up in the market if you do that. So you can see here, price is now pulled back up above the 80. So if you didn't take your pips off the table, the market just took them back. We can go back down to M1 and we can see that. Here we had an open above the mid dot twice in a row. Here we had bear candle, bull candle, at a little turn, price shot up, gave you an opportunity to make another 2 pips if you wanted. Now we've got a 1 ball, call this a pullback, price could come back down. But the fact is, you had an opportunity, if you went short at 80, to probably pick up 5 or 6 pips. Once again, you could have been done for the day if you were trading heavy enough. And see, part or a secret is you start maybe a dime a pip, then you move to $1, then you move to 2, then you move to 4 or 5, then you move to $10 a pip, and then you work your way up. Because if you can work your way up, then you've got your trading form down, you've got your system down, you've got your money management down, your risk management down. You're making progress. It's like lifting weights. And sure, you're going to probably hit a plateau. You're going to hit a rough patch, but because you have your money management in place, it's not going to take you out. You might have a few losers, but overall, you're still ahead of the game. But the thing is you want to be, as I mentioned years ago, think of scalping as smash and grab. Like you see the jewels in the jewelry store window, you smash the window, you reach your hand in, you grab a handful, and then you run like heck before the police get there. Because if you sit around and try and fill up your bag and carry away a big haul, chances are you might run the bigger risk of getting caught. So it's the same thing with trading. You can see here we were outside the wick zone, price pushed right back into it. So once again, the question is whether or not you take your pips before the market takes it back. So I hope that helps you fellow traders out there, because this stuff is really simple. You're in the trade, price is all that matters. Forget any other system, forget the charts, focus on the price, because it's not what you trade, it's how you